Hi, so this is my second video. I hope I can help people learn how to trade, and yeah, we'll go through from here. I'm just going to cover what's happened over the last day. So it's a bank holiday. So what happens on bank holiday is that well, a couple of things. So price opens here on Monday. Sorry, Sunday. Yeah, so Sunday would be your Monday candle. They don't have a Sunday candle, they have a Monday candle. So if you go, but because it only finished here at 1, you see 1 there. If you look up, can't see it because of my screen. But, if you look on the screen, the last one, 12, Monday bank holiday, 12:59, 6:01, Tuesday, on Monday, sorry. So you've closed on there on that bank holiday at 1 o'clock. So look, it's not the greatest to trade on bank holidays. So typically Mondays anyway aren't the best, but this is considered new day, so Tuesday. Yeah, I consider it a Tuesday. Okay, so you got Tokyo, London, New York. Again, not the best trading days. There's not big moves. Gap didn't get filled. Let's go to the daily. So notice how this candle Friday and straight to Tuesday, because Monday was only half day, so it doesn't really have the Monday candle. It just goes straight to Tuesday when we have bank holidays. So yeah, let me just move my picture. I think where to put it. I'll put it over here. So what I have highlighted on my chart is this volume imbalance here. From saying that, I should really this, because the gap is all the way to that. That candlestick's high. My eyes are going funny. Let's see what candlestick. Close in 29,520. You look at top over here. Over here. Look at that candle. 29,520. So I have to go here. 29,520. See here on that line. This is close. You get it? There, bang on. Look at the open of this candle. So where it says O up here, which is this one. 29,675.75. There we go. Close enough. I would grade that quadrant as well. I think to do it like this, I know ICT does it slightly different, but this is how I begin the day. And like if price came down, you'd expect it to use that, but look how it didn't even bother, it's just skyrocketed. So yeah, we haven't used that PD array at all. We've just traded higher. So I had to, when I was trading Tokyo a minute ago on my Apex accounts, I had to, I'll show you the trade that I took as well. And what I saw during the Asian session, just so you go to 1 minute. Okay, so this is the Asian session. For sake's time, let's just go to the other sessions as well. Let's cover previous sessions. So when we open here, there's a big displacement candle, which you could use as an efficiency. Can you see that? Have I spelled that right? Displacement. Oh. Okay. And then you've got, I've highlighted this. I'll show you why I highlighted this before. But anyway, so you've had massive run up. Looking at the trading this, you open here. Let's just get the new week opening gap. Is what creates that volume imbalance. Okay. So that new week opening gap. So where we closed Friday, open Sunday, new week opening gap creates that void that price could use later in the week. Perhaps Tuesday, because Tuesday tends to make the low of the week. So on Tuesday I was thinking about being bearish towards that, specifically Tuesday, and then trading higher from there, really. I'm not saying I had a bearish bias, but I was open to the idea. There's a lot of this here on today. A lot of gap and a lot of upwards with no little retracement. So really, like you're thinking, well, where would you get in? So as it opens so high, where would you get in? You'd have to look for a macro time. But again, like, I haven't looked over too much. I didn't trade this session, but just looking, like, I classify this as your first presented fair value gap. You can target all the way up to the end of the kill zone, really, 10 o'clock. But we'll skim past this because there's no real draws on liquidity. You're just kind of chasing price, really. So again, difficult to trade that, even though it looks like a nice run up. But if you have a look, I just want to see how price reacts at this. And again, at London session. Let's see if we can get. So usually, like, you take into account midnight price during London session and New York sessions specifically. Take into account here. So you're looking. So a lot of people, they tend to do is people were looking at up here, yeah. So a lot of people had their orders target below this, the stop. Whoever went up, or whoever say bought here, everyone who bought in this trend would have their stop loss below this low, yeah. So if you go for the horizontal line, even though there's not relatively equal lows here, horizontal ray works better. So this was would be my draw on price, yeah. In this session here. Reason being, price came up, comes down, sweeps that low, but everyone who profited here still had their stop loss orders below this low. Okay, does that make sense? Even though there's not relatively equal low, for me that's a key low if price is going to go down. And again, I like these highs to be taken at some point as well, because they're relatively equal highs. So I'd probably document that. Future reference. Relative equal highs, just put REH. Again, they could be used later in the day today during New York or whatever. But again, people who sold off here made a lot of profit. But again, this isn't a massive liquidity pool because a lot of people who went down got stopped, down, got stopped, but it is an area of interest. Okay, that makes sense. And then you're looking at the first presented fair value gaps. So for this one session, quite difficult. But if you're looking at areas prices reacted off, you go into that. Oh, and I tell you what I have done wrong here, to be honest. This is 247, so that looks like proposed. Because I was back testing, I've got the settings slightly wrong. 4. Just changing my indicator. Is my midnight price on the right place? No, that's on at 1 o'clock as well. I've just been back tested further back when GMT was 5, so that's why. But same principles apply. Except we can probably take this one off. And we can look at this one here. So you want, when you're picking the first presented fair value gap, it's key you're picking candle that closes through a high. So for me, this is all counts as one gap from here all the way down into here. Okay. So if you're thinking price is going to go up, which we are bullish, we've been bullish for quite some time. So when price comes down here and tags it at macro time, 8 o'clock, I mean, you could easily target midpoint if you're not confident to get the full run up. You could also, like, I look at the midpoint of with using the indicator of the session, and typically if it wants to go higher, you're not going to see it drop again and again and again through that midpoint. This midpoint adjusts as the box comes as well. So if you send that through time, you probably see reactions as well. So I'm just going to label this. First presented fair value gap Asia. You can use these for 5 days, so keep them on your charts. As long as you label them, don't get them cluttered on your charts. First presented fair value gap Asia. And what day is it? Well, Tuesday candle, so we'll just put Tuesday. Well, Monday, we'll put Monday because there's another Asian session. But it doesn't matter as long as you've got that there. So price came down. So as I noticed here, the orders. So think you want to look at buying when price comes down. So whether that's a fair value gap, whatever. Again, if you were to get in here, key to look at it is if price is going to go higher, it's going to take this low, this high here. So when we're down here, if you look at the range, so I said I was going to talk about this in my last video. Cool. So from high to low, this is the OTE. So you have take off 0.5 because I have to keep that on there for some reason. Don't need it. So in a dealing range, high to low, you've got premium and discount. If you were to sell, say you got your bias wrong or you presumed, oh, it's going to get to this gap, the way to still win is to take, you're going from premium all the time into discount, okay? So you would sell, say for example, you took this fair value gap here, this one right in there. Do you see it? Let's move on now. Zoom in. So this is when you be key, like with you, if you're not sure on your bias, you can trade within the dealing range, okay? So what I've highlighted is the swing high, swing low, dealing range. Then you've got what market structure shift, bodies staying within, drops, the fair value gap comes up, taps into order block, high, low, high, market structure shift, comes up once, taps into order block, which is the last down close candle, the last up candle before the down move, comes down, tags optimal trade entry, but also tags first presented fair value gap. So it's your discount array, meaning it's in the lower half. Yeah. So you could have also targeted this little one if you wanted. I mean, if you want to target 50% of the range, you'd have been about here. Let's put that 50% back on. I'm trying to give you scenarios of so you don't frame that you have to be right all the time. And you can still make money. So yeah, 50% of the range was, sorry, there. But ideally you want to sell from premium to discount. But say for example you did even just go short in here. I'm saying how you can trade both directions even though candlestick there, you still made a 1-to-1 on that, doubled your money. Again, if you take it down here, you're making a 1-to-2. That's low hanging fruit, what we're on about. Then if you know your bias more, you're looking to trade that optimal trade entry, but buy. So you're in discount relative to the dealing range, and you can target the high. Okay. But then you can also see how price continues to respect, and you can go up and you can go up, and then the session ends at 10 o'clock at the kill zone. Okay. And also look at what happens when price comes back up to that original sell-off. It respects none of the bodies close around it. Look at it, it's perfect how it trades to it. It's perfect how it trades down into this bodies here. No, and then it starts going, and you're at 8 o'clock. So you've got your macro time. So this is bang on at 8:02. Comes up, back into the fair value gap. Bodies respect the upper half. Same again, same again, same again, No PD raise here. Again, respects that. And it's a nice run up. It's a nice buy. Again, even if you sold, as long as you sold down to a lower hanging fruit objective, you make money even when you're wrong. Yeah, you get your stop loss, you move break even, you take profit here. Okay, so that's covered that first one, how you could have made money. Yeah. That's 7 o'clock. So you've got first presented fair value gap. To be fair, you could use this one as well, but I've used this one's the one that sticked out to me because it breaks that high after 7, whereas I'm not as interested in this little high. I was more interested here in this high. So again, and look how that level wasn't respected. Okay, this created relative equal lows. Price wants to come down. You could have this area here, this first low, is low hanging fruit, relative equal low, Asia. And again, you've got everyone who's moved their stop up. I'm not saying everyone would have, because some people would give the trade room to not do that. I'm actually getting to the point where I really understand ICT concepts now quite well from liquidity. You have to know where price is going. So when you get here, you've traded above Asia's highs. So anyone who's short here, so I wouldn't trade this times not kill zone, but you've got liquidity resting here. If you have a look, it goes back. See how it tagged that liquidity. So if you're late in on the session, thinking, oh, go on, I'll just catch the move. If you didn't take your profit, you'd have been stopped. But everyone else would have kept their orders below that low. And then you trade up and you're in dead time now. So yeah, you've got a nice little run up here that you could have caught smoothly if you knew. But the problem was you could assume we're still bullish here because it's not gonna retrace like this until we get down here, until we get to London, New York. Like there's not any relative equal lows here. This is just trend. I mean, you've got these two which we targeted, but this isn't. There's no relative equal that you got here. But again, most people were caught offside here, so I wouldn't consider these as key ones. For now, like you're more going towards these two. People who were late in on the session carried on thinking price would run, and then people here. So yeah, I think I've covered that enough. And also you've got to consider it's the level that actually is. So 900. So that's a key number, round numbers. So 902. So it's gonna come down. It's gonna come take you out at 900. To offer that price to big institutions at numbers. And then so you've got the relative equal highs, and look how it comes down through that 900 level. Yeah, and then turns on a dime, goes up. If you were in on this, so you're looking at There's no real first percentage fair value gap that stands out to me massively on this one. But again, it's trapping traders, so made a double top, 142. Again, I'm just pointing out trades, macro time. You're not being greedy. Target at midnight. Okay, so it would look like this. I'm pointing out trades that I'd have potentially have taken there to there. Macro time. And again, look how it uses that. That's 150. So I'd highlight that. Is like this one targeted through those lows was more, for me, was more the like area where you could take that profit as well, rather than thinking it has to go up to these highs. If you're down here, you can take the profit here, or you're thinking just above this high. These are relative equal highs, tagged, okay, and then showed like it did wanted to reject that, couldn't get the bodies up until that. Yeah, so we're starting to show weakness around here, okay, and then we sell off for a bit, okay, back to premium discount. So you have here 3:21, so you're getting nice moves around 3:30 at New York time. So the only trouble with getting in here, it ripped up, but you have fair value gap here. But say you have multiple fair value gaps, where do you know how to put your stop? Usually you don't want it to come down to the second one lower than that. So if I was doing this, I would have it like this, where you're long inside, because you were kind of here waiting for price to come down to this one in this candle. So you're kind of waiting for that to then rip after we've swept that liquidity. But it didn't do that, so you're trying to get in the trade, yeah? I'd have gone for that, and then I'd have targeted low hand going through midnight price, okay? But again, if you really know where that liquidity draw is, up until this fair value gap, which price reacted off before, so you just have it the low of it. And again, if you really wanted to try, you could target that high there, and that'll be what, 4-1 risk to reward, but a lot of points. Here, just got a bit of a bigger stop than what you usually would have. 4 o'clock, and again, if you'd have made a big move there, you could have noticed how this is 3 o'clock. Framing trades for you. So we think price is coming back down to this liquidity as I outlined during London. And especially like here, like you might get it wrong and assume price is going to go up to these highs because we've swept liquidity. Then you could assume bullish, but if you've done that, again, I'm framing it as if you don't know where price has got the draw on liquidity, but you know you're in a dealing range. So again, you've got up to the discount. So like we had before, if you keep using this fib, it's like X-ray vision. Optimal trade entry here if we're targeting those highs. So you could think that, but again, I'm teaching you to not always target the liquidity, target the inefficiency. Okay. So you could take profit of that inefficiency, making a 2.6 to 1. Yeah, just off that, just off targeting the low of it. If you got greedy, targeted up here, you'd have come down and got stopped. Again, sometimes you can bring your stop to break even when price moves like away here, like you've got another PD array. So yeah, if you didn't think to take profit here, you'd still be safe. And then hopefully you realize that price is going lower towards that. This is the real liquidity. That's the inefficiency. That's the liquidity. So you've got potential sell down into the midnight, or down through the relative equal lows here. You've got the buy back up into an inefficiency. You then have gives up the ghost a bit at what macro time. So if you flip this around, okay, that's where you're targeting now your liquidity, your inefficiency to liquidity. That makes sense. With that dealing range, you're within 0.79 deep premium, optimal trade entry 0.709, 0.62 again premium. You enter here just as it approaches in, if you're confident it's going lower, or you're not sure yet, or you took a trade that's took profit there, and what you're doing is you're waiting for this fair value gap. We're above midnight price, you've got the draw and liquidity, you're looking for entries, you're thinking it could go up here first, then reverse, which was possibility. So my entry model would have been through this. Okay, and look at the bodies respecting that here, bodies respecting that here as well. So my entry would have been as price comes down, you body's failing to get above it, price ghosts, and that's a nice massive move. Short, whatever you do, just always keep the stop loss above the third candle. And again, $6.74 to 1. So if you think, oh, I'm not going to get this right every time, you don't need to, right? You don't need to. You can make your 2 to 1s, your 3 to 1s. You don't need to make 6.74s. But if you make a 6.74, you don't need to be right like 50% of the time. You can still be wrong. So whilst you're learning, if you can get these right occasionally, then there's no way that you can't be a profitable trader. So where are we here in price? Half 4. I just want to check where we are in terms of the dealing range now is down here to here. I need to flip that around. there. We make a new high. So you're within this dealing range. Price goes up. Fair value gap. Price goes up. Price goes up. And price comes down this time to the 0.62 level. Or the block. Okay. Inefficiency below 50% of the level. You could take profit there. Or you could just trail your stop down. Make sure as it breaks these highs, especially as it breaks through this fair value gap, yeah, you'd be out of that trade. So not the best, but you shouldn't really be thinking of selling here because price has already took the liquidity, so we're thinking it's going up. Okay, does that make sense? So for me, I wouldn't be looking and thinking it's coming back down again after that big move. You're thinking the big moves have been done in the session. So I can remove this. And again, this is 4 o'clock. You've got a low, low, high, lower high, lower low, sorry. Boom. Into that candle, all the block sells off a little bit into the inefficiency. Here. Again, just trying to move your stop to break even is a really good one to increase your profit. Like sometimes you get it wrong, you might assume it's coming down to this inefficiency or whatever, but it didn't reach it. And when it doesn't reach it, then you know it's going the other way, okay? Then we're in dead time. See how in dead time price isn't doing as much, and we're not getting them big moves in that dead time between 5 AM and 7 AM. And then I was looking at these relative equal highs, but you've got first presented fair value gap, which is overlapping with key level. There, but again, we're quite extended. If it's coming down, we're coming down to here, but that's so extended and we're bullish on the daily chart. And look how big that opening range gap is. And there's not much liquidity left to go. But I'll show you how I use that liquidity down here in Asia session. Let's just go through this one. So people who bought here move their stops here. Okay. Stop losses. Liquidity. You've also got that key fair value gap that was utilised. And again, you've got this one down here as well. That was utilised again. And you're looking here. Let me just. If you. This is why as well, when you look at relative equal highs, you want to use the lower one, not the higher one. Especially if you've got a wick, you want to grade it to halfway. If you just literally use the top, you'd have been there. Look how close you'd have been to the target and rolled over. Sorry, it should be about there. Look, you'd have missed it. So always target the lower one if they're in very close proximity, like this. So again, opening range gaps get filled 70% of the time within the first half hour, but not when they're this size, yeah? So you've got to know about the size of this. Over 125 handles, unlikely to fill the whole thing. It's too much movement. And we're what, bank holiday Monday, no chance you'll get into that. So yeah, you've got liquidity resting below here. You've got liquidity above here. So price, when you're here and price is reacting, comes up, reacts, trades lower, 9:30, boom, straight to the red to equals highs, boom, straight to some liquidity. Funny that, isn't it? Reacts, 10:50, market structure shift, 2022 model, boom, back up into inefficiency, and again now it's coming down for it's took liquidity's taken, we're short, fair value gap, first presented fair value gap in London, comes down, comes up above midnight. Again, when you're here and you want to go the other way, you're targeting the inefficiencies or midnight price. When you're coming down, you're targeting first percentage fair value gap. Again, we're trying to not go extremes. Again, look how now it's taken all this. It's done a lot of work up, very hard to trade if you don't know what you're doing. Price opens here on 6 o'clock. Gives up the ghosts. And I highlight here, first percentage fair value gap. Trades up to it, trades there, trades lower, touches, tags it. It's 8 o'clock macro time. Boom, straight down to ready to equal those. You get out here. Again now, we're looking, it's coming lower, it's coming lower, it's coming lower. And we're about here now. So, could come down further. But again, now we're in dead time, so I'm not interested in this again. Okay. But you've got liquidity being taken below Tokyo's lows here. But there's no reason why it can't come down into this. It's got a lot of gap from here down to here. Not been traded to, all of this hasn't been traded to. It's left relative equal high, like, yes, it tagged, not meaningfully through. So this will be retail support, resistance, sorry. Like how I'm more versed on ICT than I am retail. So this was like, if you imagine a fence, it comes up to the fence, comes up to the fence. Everyone's looking at this retail selling, so we know at some point it's going to target up here. and whether it wants to come down to the liquidity first, the inefficiency first down here, lots of inefficiency, or it wants to run higher. We can start to see when it gets to 7 o'clock what it wants to do first. Again, a lot of people have got in this down, trap people in both ways, but again, it's had a meaningful place displacement through, but it's just gyrating. I'm just going to remove everything from the chart. You can sort of see everything more clean now. Sort of start to see how in retail would see that as downtrend, yeah. So trend lines. Okay. So it might want to come up to the highs here. Or it might decide to gyrate round into the zones we highlighted before going higher. And to fill the gaps. But again, time will tell. I can't see until we had some, like, for example here, like engineering liquidity. You always want to look back. See if this can act as an inversion. Trade down into this. But it looks like it's in a bit of a holding pattern, so, and again, dead time, so not entering trades yet. But anyway, that just sums through the way I think about the markets, the way I look at the markets. So yeah, if that was helpful, please subscribe. A bit of a quicker one, but I didn't want to make this one too long. But yeah, I hope, and I'm going to get some sleep now as well. So I hope that was okay. Should we just see? Might decide to make a run up and come down later, which it looks like it is going to do. So it might pre-market, start to make meaningful, take out these relative highs here. Dealing range from here to here if you like, or you can use this one. But again, you target dealing range, relative equal highs. And again, you can see, but then we've got all the way down here, all this liquidity as well. But we're bullish, so until price makes it evident it's going lower through this low, I'm more interested in the higher. Again, like if it comes down here, unless it trades through this low, I'm not really interested in sell-offs. I'm interested in the liquidity here. The liquidity that is resting here, here, above here, above here. Yeah. But again, you're looking at smaller moves going through that candle. Take here, could take here, could start to make its way lower. It's all about trying to find where the next draw on liquidity is. So or whether price will move towards that inefficiency. But yeah, I hope that was helpful, and peace out.